This
class,
conference will now be recorded.
like we had started up with income statement, and I had given you people the assignment of two income statement, that is last 4 and 5. How many of you were able to solve it? So if anybody has solved it, please type in 1. Ananya has solved. Then anyone else? Okay, so let's solve that fourth and fifth income statement, and then we'll proceed further for balance sheet. Okay. Okay, so I hope you people have opened up with the income statement. So first I wanted you people to observe, listen, and then you people, I'll give you the time to solve it. Then you people can try to solve it. Okay. So now here I have to calculate the income statement for 5 years. Okay, wherein they are telling the revenue is there is an increment in the revenue by 8% yearly, and cost of goods they are telling that there is an increment by 12% yearly. Okay, so first here the revenue is 900. So what about the rest of other 4 years? So I'll type in equals, I'll take the previous year revenue into, so they are telling there is an increment by 8%. So 8%, so plus the previous year value. Enter. I'll come here and I will do the fill series. I'll show you once again if you people did not understand. So first I need to type equals, take the previous year revenue into 8% plus the previous year value. So this is going to calculate the rate and rate of increment plus the previous year value. Enter. Now I'll come here and I will drag it towards my right. The same way I have to calculate for my COGS also, equals 350 into, they are telling there is an increment by 12% plus previous year COGS. Enter. And I'll just come and drag it towards my right. Now here I need to calculate the gross profit, that is year 1 revenue minus COGS equals 900 minus 350. Enter and go here and drag it towards the right. Now I'll come down. So they have given the operating expenses. What are the expenses that was happening? So I'll come here, alt equals. So I'll just remove the selection. Only the blue colored values I need to select. Enter. I'll come here and I will drag it towards my right. So I'll show you once again how to calculate the operating expenses. So if you want, you can put equals sum of, open the bracket and select the range. That is from G6 to G13. Come here and drag it towards my right. Then I have to calculate the EBITDA, that is equals 550 minus 509. That is gross profit minus your operating expenses. Enter. I'll come here, drag it towards my right. So then depreciation, they're telling depreciation is happening at the cost of So actual cost they have already given. So I'll come here. So it is equals G15 minus G16. That is EBITDA minus depreciation. So here I'll come and I'll just drag it towards my right. So I'll come down here. So PBT, profit before tax, equals G17 minus G18. That is my profit before tax. I'll come here and drag it. So here it will be, I'll give tax as, so tax here we will give it as 0 because first year there is a loss. So I'll give it as 0. So here I'll come equals 195 into 35% of tax. So they are telling it is 35%. So I'll come here and drag it towards my right. So profit after tax, that is PBT minus tax. So it is 153 and here I'll get the values. So I hope you people were able to follow it. So I hope you people have understood with this. I wanted you people to solve this. I'll give you 10 minutes of time to solve this. If anybody did not understand, please do tell. I'll explain it once again. If everybody has understood, type in 2 in the chat box. Okay, I'll give you 10 minutes of time to solve this. Then we'll continue with the fifth one. So at the end, you should get these values.
Excuse me, ma'am.
Yes, ma'am.
Ma'am, can you show the current tax one once again?
Tax calculation. Huh?
Yes, ma'am.
So tax calculation means till here, till this one PBT you have understood, profit before tax.
Yes, ma'am.
So PBT, how we are getting it, it is like EBIT, whatever the value I'm getting minus the tax, I'm getting the PBT, isn't it? So whatever the PBT I'm getting, based on it, I have to apply the tax. So first here I'm facing the loss. So here I'm not going to calculate the tax, for instance. So I'll tell first year I'm going to take it as 0, enter. Then second year I'll tell equals 195 into 35% of tax. So 35%, enter. So I'll come here and drag it towards my right. Okay, so the tax will be calculated on your PBT, which is 35%. Now here I'll come, I'll tell equals G19, that is my PBT minus the tax. So first year it is going to remain loss. I'll drag it towards my right. So my calculation is done. Clear, ma?
Okay. Thank you, ma'am.
Yeah. Yeah. Hope you people are were able to do this. So let's move on to income statement 5. So here they have given the assumptions, the current case and the base values, what it is required. So initial sales volume in units, it is 1 lakh units that has been sold, and initial sales per unit. So sales per unit is cost is 125 per unit. So initial cost per unit is 75. Each year the revenue increases by 15%, and each year COGS increase by 20%. Okay, so based on this values, whatever they have given, we have to create the income statement. So now let's start. So year 1, I'll give it as equals, that is 1 lakh into sales per unit, initial sales price per unit. Okay, so I'll just remove this values, just remove the values what it is appearing, selling this one and all, whatever it is coming. So it is 12 lakh, so 1 lakh 25,000. Then they are telling that there is an increase of sales by 15% every year. So I'll tell equals the previous year sale into 15% plus the previous year sale. Okay, enter. I'm going to come here and drag it towards my right. Then COGS equals, that is 1 lakh into cost price per unit. So they are telling there is an increase of COGS every year. So I'll come here after calculation equals into, by 20% they are telling there is an increase, plus the previous year COGS. I'll come here and drag it towards my right. Now gross profit, it is equals sales minus COGS. So I'll come here and drag it towards my right. So selling and administration cost, they are telling it is by 25%. So that is on, so on what they are telling, on the revenue. So here if you see, so selling and administration are 25% of revenue for that year. So I will tell equals, so that is sales revenue into 25%. So I'll just come here and drag towards my right. Okay, EBITDA, so that is equals gross profit minus selling and administration. I'll come here and drag it towards my right. Then, so depreciation, they are telling 2000 rupees depreciation is happening, equals, so EBITDA minus depreciation. So I'll come here and drag it towards my right. So interest, they are telling it is 1500 equals EBIT minus the interest. So I'll come here and drag it towards my right. So tax, that is on EBT, earning before tax, equals 18,71,500 into 30%. So this is my tax. I'll come and drag it. So here profit after taxes equals, so EBT minus tax. So I'll come here and drag it towards my right. So this is your values, what you will get it after your income statement calculation for 4 years. So did everybody followed it? type in 1 if you have understood.
Excuse me.
Yes, ma'am.
Ma'am,
Yes,
can you
Megha.
explain marketing and administration cost?
Okay. Which one? Selling and administration, sir? So selling and administration here, when you look at this one. So what they are telling is selling and administration cost are 25% of revenue for that year. So whatever the sales that has happened for the first year, on it I have to calculate 25%. So here I will tell, so I just remove this. So I will tell equals sales, that is the revenue, into 25%. Enter, and here I will come and drag the same towards my right. So whatever the revenue, the sales that has happened at the beginning of the year, based on it, the selling and administration cost will be applied at 25%. What it, ma?
Yes, ma'am.
So I'll give you 10 minutes of time to solve this. If at any point you are not able to get it, please do tell. I'll explain it.
Yes, ma'am.
Yes, ma'am.
Ma'am, can you explain cost of goods sold again, ma'am?
Cost of goods sold means here in the question only they have mentioned. So initial sales volume is 1 lakh. Okay. So per unit, the amount what I'm selling at is 125 per unit I'm selling. So the cost price to buy one unit was 75 rupees. Okay. So here I am telling that it is V3, that is initial sales volume into the cost price. So COGS is nothing but cost of goods sold. The items how much I have sold. Like one pen I am selling means for 50 rupees I would have bought, and I'm selling it at 100 rupees. So whatever the selling amount minus the cost, whatever I have spent it on buying that item, that will be my profit. Okay. COGS is nothing but the cost I have incurred to buy that particular item, and the selling price is nothing but the cost that I am setting to sell that item. Okay, so here I need to calculate. So how many sales unit, how many units I have sold? 1 lakh unit I have sold. To buy that 1 lakh unit, each unit I have paid 75 rupees. That is 1 lakh into 75 will be my COGS. So
Okay, ma'am.
here I have taken equals, so 1 lakh into 75. And COGS they are telling it has been increased by 20%. So next year I'll tell 75 lakh into 20% plus the previous year COGS. So here why am I taking it like this means, so 75 lakh into 20% is going to tell me the rate. So that is actual value. So I have to add it with the previous year value. So then I will be getting this current year's value. So I am going to increase the same for the rest of the years.
Yes, ma'am. Got it.
So in the meantime, I wanted you people to download the balance sheet file. So hope you people were able to solve this also. Income statement everybody has understood, I believe. So let's proceed further with balance sheet. So open up with balance sheet 1. So let's solve this. Hope everybody has downloaded the file. So first I wanted you people to observe, then I'll give you the time to solve it. So first balance sheet 1. So the first conditions they have given the expenses and the things. So accordingly I need to put the items on the balance sheet. So on the liability side and on the asset side, what are the items that are going to fall? I need to put the values. Cash equals 35,000. Other assets. So other assets, it is equals 10,000. Inventories 35,000. Then account receivable 40,000. Land, it is 1,25,000. Building 4 lakh rupees. Equipment, so it is 2,50,000. So then account payable on the liability side equals 50,000, loans payable 1,25,000, then retained earnings. So retained earnings 6 lakh rupees and owner's equity 1,20,000. So I need to add this assets value and all. I'll just type in alt equals enter. So here I'll come. So first I need to total the liabilities. Then I have to total the equity. So then total liabilities equals total liability plus total equity. So both the sides, the values should match. Okay. So accordingly, there is some changes with which they are telling in the exercise one. Okay. So with the same values, the necessary changes wherever it is required, I need to maintain the changes. Okay. So where and all we are going to make the changes. So I'll solve this one, then I'll give you the time to solve this two together. Okay. So here they are telling a company named ABC collects rupees 10,000 from its existing customer against sales. So here they are telling that we are collecting the cash amount of 10,000 rupees from the customer. So here I'll tell equals 35,000 plus 10,000 rupees what I am receiving. Okay. Other assets, it is going to remain the same, equals inventories, it's going to remain the same 35,000, account receivable 40,000. So account receivable, so if you see here, they are telling that whatever the existing customer, so I am collecting the 10,000 rupees from them. So here account receivable, where I am receiving the cash from account receivable, I have to reduce 10,000 rupees. So what I'll do is I'll subtract 10,000 from this. Okay. So account receivable, when I have received the 10,000 out of 40,000, so remaining 30,000 I am yet to receive. Okay. So land equals 1,25,000, building it is 4 lakh, equipment it is 2,50,000. Then account payable. So account payable it is equals 50,000, equals loans payable 1,25,000, retained earnings that is 6 lakh, then owner's equity that is 1,20,000. So I need to just make the totals. Alt equals enter, and here alt equals enter. So here cash I am receiving 10,000 rupees from the amount which I am supposed to receive. So that is from my account receivable I am receiving, I am collecting 10,000 rupees from them. So receivable 10,000 rupees has to be reduced, and that amount I am collecting it as cash, where I need to add this to the cash. So here the only changes that is going to happen is account receivable minus 10,000 and cash plus 10,000. So I wanted you people to solve this too. I hope you people understood this. So with very simple examples I am doing it, girls.
Excuse me, ma'am.
Yes, ma'am.
Ma'am, can you explain the total liability of the first company? I mean, not the first company, before that.
The beginning one, total liability.
Yes, ma'am.
So total liabilities account payable. So account payable here I am supposed to pay 50,000 rupees, and loans whatever the loan I have taken is 1,25,000 rupees. So total liabilities means the amount which I am supposed to pay. So account payable from my suppliers, from my creditors, whatever the item I have purchased, For that, I have to pay 50,000, and loans, whatever I have taken from the bank, that is 1,25,000. So overall total liability, the amount that I'm supposed to pay back is 1,75,000 rupees. Retained earning, they are telling that it is 6 lakh rupees, and owner's equity is 1,20,000. So total equity is 7,20,000 rupees. So how much is the amount which has to be taken out of my profit? If you see, it is total liability 1,75,000, which I am supposed to pay back, retained earnings and the owner's equity. So overall, I am supposed to take out 8,95,000 rupees. Okay. So total assets and the total liability should match. It should get tallied. Got it, ma'am?
Yes, ma'am, got it. Thank you.
Excuse me, ma'am.
Yes, ma'am.
Ma'am, for the first question, the company named ABC collects 10,000.
Yes.
Second problem, that how the cash came 45,000.
So here we are telling, before, if you see, the amount receivable, the amount what I'm supposed to receive is 40,000. Okay, when I am bringing forward the values, here amount receivable is 40,000, from where I am telling that the existing customer, understand the point what they have given. A company named ABC collects rupees 10,000 from its existing customer, means who is already the customer, who is supposed to pay me 10,000 rupees. Okay, so out of that 40,000, I am reducing this 10,000. So whatever the amount that is reduced, here I am receiving it in the form of cash. So that is why here 35,000 plus 10,000, it becomes 45,000.
Okay, ma'am. Thank you.
Yeah. I hope we can move to the next one. So company ABC purchased new equipment for its factory worth rupees 30,000 on credit. So here cash, we'll take the values. So cash it is 45,000. So equals 45,000. Other assets 10,000. Inventories 35,000. Account receivable, so that is from my customer, 30,000. Land, it is 1,25,000. Building, it is 4 lakh rupees. And equipment here, so it is already I have 2,50,000 worth equipment. On top of it, I am purchasing new equipment worth rupees 30,000 on credit. So this 30,000 has to be added to my equipment plus 30,000. Okay. Then here account payable. So the amount what I am supposed to pay here, it will be like previous years, it is 50,000 plus now whatever the new equipment I have bought. So I have bought the equipment but I have not paid it. So they are telling that company ABC bought new equipment for its factory worth rupees 30,000 on credit. That means I have not yet paid it. So that will be falling into account payable. So 30,000 plus loans payable and retained earnings 6 lakh equals owner's equity 1,20,000. So now here equipment I will be adding 30,000, and here that amount whatever the equipment I have bought I have not yet paid it, so that will be carried on with your account payable. The amount will get added to the account payable, means I am supposed to pay this much of amount now. So alt equals, and this side also total liabilities. So both the sides it should match. Okay. So if you look at the third point, so third point, received order worth rupees 5,000 from its customer, existing customer, in exchange for an expert supervision. So here nothing we are going to put it for calculation because I am making an exchange. So I am exchanging the expert supervision services for the order, okay, with my customer. I'm just exchanging. So the amount overall it is going to remain the same. So equals 45,000. Other assets, inventories 35,000, account receivable 30,000, land 1,25,000, building 4 lakh, and equipment 2,80,000. Account payable 80,000. Then 1,25,000 on loans payable, retained earnings 6 lakh, owner's equity 1,20,000. So here in the third this one sum, there is no changes that is going to happen because order worth 5,000 from its existing customer in exchange of expert supervision. Okay, so this is going to remain as it is. Okay, no changes in this third one. Fourth one. So if you people can tell me how it has to be solved. I hope you people have solved the previous ones. So here they are telling ABC company made an expenses worth rupees 2,000 3,000 to pay a vendor bill. Means whatever the account payable that was already existing, out of which I have paid 3,000 rupees. Okay. So here the values are going to get impacted on the cash, that is 45,000 minus 3,000 rupees. 3,000 rupees I am paying by cash. Okay. Other assets, it is going to remain the same. Inventories, account receivable, land, building, and equipment. Now account payable. So whatever the value I was supposed to pay equals 80,000, out of which I have paid them 3,000 rupees. Okay. So that will be 77,000. Loans payable 1,25,000. Retained earnings 6 lakh, and owner's equity 1,20,000. So overall alt equals, so 9,22,000, and this side total liabilities 9,22,000. So I'll give you 5 minutes of time to solve this. So the other two, what we have, the fifth one and the sixth one. So I wanted you people to do it as an assignment. I will solve the balance sheet 2, so that you can try with the balance sheet 3 also, so that we can cover up with the things as early as possible. So you just need to follow the instructions, whatever they have given, and implement the same in the balance sheet. I hope you must have understood by now. So whatever the things they have given in order to implement, so just you need to implement the same thing in the balance sheet and make the necessary changes in order to get the values. So I wanted you people to do with the rest of the other things like 5, 6, 7. There are three more things, three conditions they have mentioned. If anywhere you are finding it stuck or you did not get it, please do tell. I'll explain it. In this fourth, fifth, sixth, and seventh. This four I asked you to solve it. Fourth one I have done. Fifth, sixth, seventh. Three more balance sheet you need to solve. Is anybody having any difficulty in solving this? If anybody is having any such doubts, please you can get it clarified. The fifth, sixth, and seventh. So hope everybody are able to solve this. Type in 2 if you people are able to solve the 5, 6, 7th one. Ananya and Charita. Okay. Adrita. What about others? People are not able to solve it. If anybody is not able to understand or follow anything, girls, please ask. Krupa, tell me, ma. You're having any doubt?
No, ma'am. Sorry, ma'am. By mistake.
Fine, fine. So, Saida, you wanted me to explain the third one. So third one, there is no changes here. What they are telling is the condition what they have asked to implement here is received order worth rupees 5,000 from its existing customer in exchange for an expert supervision services. So here nothing we are going to add or remove because we are just exchanging the service. So we are receiving it and at the same time we are giving it back also. So that 5,000 rupees nowhere we are going to show it. So that is why we are going to take the values as it is from the previous ones. Okay, if there is anything to be added and anything to be reduced, we can show. So there is nothing. So here we have to add means receivable, payable, we have to show it in plus or minus because it is just an exchange. So we are receiving at the same time we are giving. Clear, ma? Saida, is it clear? So if I have to show, it should be reduced and added in the account payable and account receivable. So I wanted you people to solve with this 5, 6, 7 and balance sheet 2, this one. So you have to just put in the line items in the respective places and solve it. Okay. So till now you have solved so many balance sheets. So you must have been got an idea that where and all, what and all line items should fall, which and all should come under current assets, which and all line items should come under fixed assets, what and all should come under liabilities and owner's equity. Just put the things into the places and we try to solve it. Tomorrow we will solve with this 5, 6, 7. If you are having the doubt, we will do with that and then we will solve this balance sheet 2 and then we will proceed further. So this things balance sheet condition 5, 6, 7 and balance sheet 2. So this ones I'll give it as an assignment for you to solve it. Will it will be done? So tomorrow if you are still having any doubts, we will solve it in the class. But I wanted you people to give a try. Can it be done? Type in 1
Yes,
if it is
ma'am.
okay with it. Okay, girls. So today we'll wind up the sessions. So we'll see you tomorrow. So I wanted you people
Excuse
to
me,
try
ma'am.
to solve it. Yes, ma.
Ma'am, when
Jenny,
will
tell
our
me.
test be conducted, ma'am?
It will be on 13th, ma, next month,
February, ma'am.
February
Ma'am, but
13th.
the
Yeah.
CIA starts from 12th of Feb, ma'am.
exams, sir.
Yes, ma'am.
Yes, ma'am, we have
So
that entire week.
entire week. So you just confirm with your management whether the tests are conducting. I will just put in a word. So what about others? Everybody are having the exams starting from
Yes,
12th.
ma'am. The whole week from 12th to 17th is our internal exams.
Okay, okay. Somehow by the time we'll be finishing with the entire concepts, 12th we were planning to do with the revision, and 13th somehow we had planned to take up with the exams. So only revision and exams will be left out. So I'll just put in a word to our management and let's see what can be done. Okay. Just confirm me tomorrow also, girls. So people can leave. Thank you.